Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, April 9th at about 12:30 p.m. Eastern. Well, the S&P 500 and Dow hit record highs today as economy-linked stocks, including banks and industrials, gained on optimism around strong U.S. economic growth. The banks will kick off the first quarter earnings season next week, and analysts expect profits for S&P 500 firms to have jumped about 25% year on year, the strongest performance for the quarter since 2018. And on that good note, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that tracks our benchmark S&P 500 index. Now, you may say, why do we follow the S&P 500 index? Well, as traders especially, and investors too, we want to know where the benchmark index of the U.S. stock market is going. Because 3 out of 5 stocks will follow it higher and 4 out of 5 stocks will follow it lower. So this is our kind of crystal ball, if you will, to give us an idea of what shape the markets are in. Now today, Friday, as I captured this chart, the SPY is touching a new all-time high at $409.27. That's about 40.92 on the S&P 500 itself. Now, as you will note here, if you can see on this chart, the SPY is trading at about 11 points or about 3% premium to its 20-day moving average. That's the red line on this screen right here. That doesn't happen too often. We can see it happen back here in October of 2020, and certainly back in August for a brief period of time, and back in May of 2020 for a brief period of time. But we see it happening now. Quite honestly, the market does many times like to go up before, in the week before earnings season. So hey, we have nothing to complain about here. As you will note, the SPY has been walking up the 20-day moving average, and this is a simple moving average. The red line is the 20-day moving average. The green line is the 50-day moving average. And as you can see, if we look back just to November of 2020, we can see how the SPY and has been walking up the 20-day moving average and the 50-day moving average very, very nicely for all of that time. If we look left even further in the past, we can see how that also happened for from May through basically August of 2020. So these are good lines, good trend lines for the SPY to use for support and resistance, especially in a healthy market like we have right now. So what else do we need to know here? Well, as traders, if we want to worry, here's something to worry about. All of this happening on the last week, in the last week of this climb up here, especially the last 5 days, is happening especially at the end of this week on low volume. What does that mean? That means there aren't many people at this party. It's a heck of a party, but there aren't many people here. And that can be something you want to pay attention to. So, and we look at the volume and compare it to volume very nearby to it. So that's how I'm looking at it the last 2 days. So we'll see what happens. Again, we have support down here at 397 at the 20-day. We have potential support at $390.47 on the 50-day. Of course, there's more support down here at about 370, 371 from these lows here. And we have the 200-day moving average at 357 and change. Lots of support if the SPY needs it. Can it move higher from here? Well, heck. Never say never. We'll see what happens. But I, for one, am keeping in my protective stops to make sure I capture the profits I already have. Let's go on to our next chart. Our next chart today is the second chart we usually look at, the Invesco QQQ, symbol QQQ. This ETF represents the Nasdaq 100, which, as you know, is a major index in the stock market. The top holdings include Apple, Amazon, Alphabet, Facebook, that whole group. Now, when I captured this chart today, the QQQ was trading at $335.45. That's right at prior all-time highs touched on February 12th, all-time closing highs back here at $336.45. So that was the past all-time closing high. We'll have to see where it closes today, but it's right back there. Now, as we know, since that February 12th high, the QQQ, the techs tended to fall back a little bit here. The Qs fell lower, plunged right through their 50-day moving average. That's always important to note that because it's usually not a positive thing. Came down here to these lows at about 301 right down here, 301. And we drew this trend line here, and if we extended this trend line, it acted as support when the QQQ fell back at the end of February, 1st of March. It actually held the support here. So trend lines can be important areas of support too. Then the Qs bounced, consolidated, and then started up. Now look here, it made a higher low. That's always positive. That means buyers came in and didn't let the Qs fall all the way back down to their prior low at 300. They came in, the buyers came in at about 310 and held the Qs up, and the techs managed to rally back above their 20, 50-day moving average both, and as we know today, back up right at the closing highs or within a few cents of it. So it's all positive here as we go into earnings season is what I meant to say. So we have to see in the coming week with earnings season and a lot of these big tech stocks, when they announce their earnings, it really, really pushes the QQQ one way or the other, especially the heavily weighted ones. I mean, they can rally this thing way up and they can push it down pretty well too. So keep an eye on the Qs. We also noted that there is very low volume today and for the past few days, just as there has been on the SPY. So we can almost say here, new highs, low volume. What do you think of that? Just something to put in your back pocket there and maybe make sure your protective stops are in place. Okay, on to our final chart for the day. I must tell you that after going through many exchange-traded funds in all kinds of sectors and industry groups, everything that I am looking at pretty much is way overbought. And I'm not really fond of buying at what could be the highs or near the highs. So I came up with the VanEck Gold Miners ETF, which has actually a very decent setup right now, and I believe gold could possibly head higher in the future. Look down here at this volume right now. In the past week and a half, volume started up here. So has the GDX. So looking at the VanEck Vectors Gold Miners ETF, symbol GDX, we know that it has 52 holdings. The top components are Newmont Mining, Barrick Gold, Franco-Nevada Group, Wheaton Precious Metals, and Agnico Eagle. So after touching a low in March of 2020, which you cannot see on this chart, not this low, but a further low, it went down to 1618, the GDX did. It did a very, very pointed V shape down and immediately back up. And so it went down to a low of 1618 in March. Then it climbed back up, and as you can see here, it jumped back up over its 200-day, its 20-day, its 50-day moving average. It jumped back over, almost parabolic move here into April, May. Corrected somewhat, took some profits back in the end of May and June, and then rallied back up in another really steep move here up to these highs, about 47 in March of in August of 2020. Came up to these highs at about 47. Then it made a really kind of checkered pattern here, up, down, up, down. I don't like these kind of patterns. I don't want to be in them. whether short or long, but it did gradually fall back down below its 50-day moving average, headed down into November of 2020, bounced back up again. So we've got this trend line coming down here type thing, and then gradually fell down to these lows that took place back here in April and June of 2020. We had a support line that we could draw there, a horizontal support line. If we kept drawing it, it would have held that line pretty much down here in February 1st of March when it consolidated. This is right at $31 and change. So it held that line, the GDX did, then started up and actually started making a higher low here. And remember what I told you earlier in this session, a higher low means that buyers did not wait for price to come all the way back down and to where its prior low here at 31 and change. Buyers caught up with it sooner than that, made a higher low, which always is a good thing. Look down, there's volume in this line here, and then it started up. So I think we may be getting a little bit of kind of feeling here of maybe inflation is coming in a little, and that usually does help with put gold prices higher. So again, when I captured this chart, the GDX was trading at $34.77. We can see here today that the 20-day moving average is attempting to climb over the 50-day moving average. The 50-day is coming in at $33.38, and the 20-day right below it at $33.37. So in the coming week, and we may have a bit of a trend line. I'm going to dry this down here. We don't know for sure that this is a top here, so I hesitate to draw this much further, but if we did draw it, it would, and I'm not doing a very good line here, am I, people? No. We may have a little bit of resistance here if this trend line could be drawn properly, but I do believe with this volume in here, if it's time for gold to go up or gold miners, I believe this may be the time. So in the coming week, if GDX can stay above the 50-day moving average at $33.38, I will add a small portion of shares to my trading portfolio as long as it stays above $33.38. If it can move higher after that and cross over $35.75, if it can do that, crossing above these highs, then I will add to my position. Of course, at that time, I will have a trailing stop in this trade. So you may want to keep an eye on the GDX in the coming week. And of course, going into earnings season, it always gets the ride usually gets a little bumpy. So fasten your seatbelt. And now before we go on to final thoughts, if you'd like to become a more successful trader, this is a great time to check out my trader training programs. You will love my powerful strategies devoted to swing trading, trend trading, bottom fishing, and more. My programs are easy to understand, and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen right here, or click on the orange button below. And now, on for final thoughts. What I'm thinking about today is we've been through the first quarter, right? We've just gotten through the first quarter. We're at the end of that. So this is our question for the week. As I reflect over the trades I've executed so far this year, what were my challenges? What were my strengths? And what actions can I take to improve my trading profits? Now, all business people and professionals look back over prior time periods to examine their numbers and business strategies to see what worked and what did not. We all know that. Just so, we as traders must examine past trades to see what we did well and which strategies and money management systems need strengthening. So what has your general mindset been during 2021? As far as mindset goes, have you felt generally good about how you've handled your trades, or do you see room for improvement? Since most of our limitations come from our mental approach to trading, please make plans right now to eliminate those thought patterns that you know are limiting and replace them with positive ones. Then pinpoint your strengths and decide what steps you can take to elevate those strengths to make them even stronger. Okay? Next, look over your trades and check the profit and loss statement for each month. Of course, your objective is to earn more money than you lose. That's it, guys. You earn more than you lose. Second, you want to see a gradual increase in your profits. Your profits should be getting bigger. And we've been in one heck of a bull market, so please tell me that's true. If it didn't happen this past quarter, check what was going on in the market and evaluate how you handled the market's moves. And please do this in a kind way. Don't say to yourself, oh, I really messed up there. Look back and see what happened and learn from any mistakes you made. Finally, if you haven't done so already, make this the week you start a trading journal. They are invaluable. Record your trades and make notes as to what was going on in the market during those trades. Many traders I know capture the price charts of the trades they executed, and once the trades are complete, they mark on the charts where they entered and where they exited, and they study the entry and exit point to see what they can learn. It's amazing when you see a chart, you go, oh, I get it. Yeah, I get it. It's a great learning tool, and it's an excellent way to recognize what you can do to achieve more trading success. So here's the bottom line. This is the perfect time to reflect on the first quarter of 2021 and write down ways you will change your approach to the market to take advantage of new opportunities. Anything that needs changing, change it up now. If you follow through on this exercise, you are going to find the second quarter and this summer your trading is going to be easier and much more profitable. Finally, if you'd like to become a more successful trader, check out my trader training programs. To see all of my online training programs, simply go to the link on this screen or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.